Hello and welcome to this video on foreign direct investment. So a quick starter question for you. Can you think of any British businesses that operate in the UK but are owned or part owned by Chinese owners? You want to pause the video, see if you can think of any, and then continue. Well, these businesses are all owned or part owned by Chinese investors in the UK. And in this video, that's what we're going to look at. We're going to look at what is meant by foreign direct investment. We're going to look at some of the reasons why businesses may undertake FDI and also look at some examples of foreign direct investment. So let's start off with what is meant by foreign direct investment. Foreign direct investment is investment from one country into another, normally done by companies rather than governments, and it involves establishing operations or acquiring assets in that country, or it could also include buying shares or stakes in businesses in that country. So for example, when Chinese owners bought a stake in Weetabix, that would be foreign direct investment coming into the UK because the Chinese business has bought a stake in another business. When Jaguar Land Rover, a UK-based company, opened and expanded a factory into another country, for example, here they opened a factory in China, that would be FDI going out of the UK into another country that involves establishing operations or acquiring assets abroad. So that's what we mean by FDI, foreign direct investment. Most foreign direct investment is horizontal in the sense that they tend to be replicating or duplicating what they do in that other country. So Jaguar Land Rover, for example, they have their own factories in the UK and they duplicated that with their own factories in China. Occasionally you do get some vertical FDI where a business will maybe acquire a business at a different stage in the production process in a different country. If we have a look at the amount of FDI that's been going on around the world between 1970 and 2015, you can see there's quite a large increase over time. The trend is for a much greater amount of foreign direct investment. So what this tells us is the world is becoming more globalized. Increasingly, companies are setting up operations in other countries, building their own factories or assets abroad, and also increasingly foreign investors are buying up stakes in businesses in different countries as well. So we have two types of foreign direct investment, and we have two key terms here that we need to be able to describe. Inward foreign direct investment, or inward FDI, is when an overseas business, for example, decides to build a factory in the UK, or a foreign firm decides to buy a firm in the UK. That would be inward FDI because the money is coming into the UK and the activity is taking place in the UK. Outward FDI, outward foreign direct investment, is the opposite. That would be when a UK business expands into another country, maybe opening a new facility, or a UK business buys a stake in a foreign company in another country. So that is money leaving the country, and so outward foreign direct investment. So let's have a look at some more data specific to the UK. So this chart below us shows us the inward and outward FDI flows. So the yellow bars show us the outward FDI. So this is the amount of money leaving the UK and going into investment projects abroad. The blue bars showing the amount of money coming into the UK from overseas. And if we have a look at the trends from year to year, there tend to be some differences. For example, 2007, the UK invested a lot overseas, more so than was invested in the UK. But prior to that, 2006, it was the other way around. So there's no particular trend, and you might say on balance, they tend to balance each other out. In terms of FDI, inward FDI into the UK, these are the top countries that are creating projects or expanding their own operations into the UK. So the United States typically provides a lot of FDI into the UK, and then you can see some of the other countries below with the number of projects that they're providing and the number of jobs that come with those expanded operations or investments. Some examples of inward FDI. Well, here we have a German wind turbine company that is investing and setting up a factory in Hull. So that would be an example there of a German company expanding their operations into the UK, setting up a factory in the UK, so that would be inward FDI. Here we have a Japanese business that buys a significant stake or takes over a microchip manufacturing company in the UK. So acquiring the stake, that is inward FDI, they've acquired a stake, the foreign companies acquired a stake in a UK business. What about some examples of outward FDI, outward foreign direct investment? Well, here we've got an example where JCB have expanded their operations into Brazil and spent $100 million building a new factory within Brazil. Here we have an example where a British company, Vodafone, has bought a Spanish company, Ono. So that would again be an example there, buying that stake in a foreign company, outward FDI. A particular relevant partner for the UK over a number of years has been China. And let's think of some questions we might ask about the relationship between FDI and China. First of all, can you name any Chinese companies operating in the UK? Secondly, can you name any UK companies operating in China? Thirdly, can you name any UK companies owned by Chinese investors? And lastly, can you name any Chinese companies owned by UK investors? Well, the answer to question 1, you might think of some Chinese companies maybe selling their products in the UK, for example, Lenovo and their laptops. Chinese companies actually operating and building stuff in the UK is a little bit trickier, but recently there was an example where a Chinese construction firm teamed up with the UK Housing Association to make factories that would produce prefabricated homes, kind of like flat pack homes. Secondly, can you name any UK companies operating in China? Well, you might have mentioned Jaguar Land Rover, who we mentioned earlier in this video. Can you name any UK companies owned by Chinese investors? Well, there was a number that we mentioned at the start, one of which was Weetabix. And then lastly, can you name any Chinese companies owned by UK investors? Well, that's quite tricky. There are still some restrictions about foreign ownership of businesses within China. So often UK businesses have to partner with a local Chinese company. So for example, BP have recently partnered with the Chinese National Oil and Gas Company to set up some new mining projects in the China Sea. So China and the UK have quite a strong FDI relationship. Typically what we've seen over the last number of years is a number of UK companies starting to try and operate in China, and a number of Chinese investors buying up stakes in the UK. Questions 2 and question 3 were probably the most relevant ones that we would look at this stage. Okay, so finally, what are the theoretical reasons why businesses or economies would encourage foreign direct investment? Well, one advantage of opening a factory, say in China or other emerging economies, is you can take advantage of lower labor costs. Again, you might choose to operate a business in a particular country to be closer to a source of raw materials. So therefore, BP are operating in other countries where they're closer to oil reserves and gas reserves. One reason why China in the past or other foreign investors in the past have opened up projects in Europe is to be operating inside the EU and therefore avoid any tariffs or quotas. One reason Chinese investors are targeting a lot of UK companies is that they can get a good return on their investment by buying up valuable assets within these countries. And lastly, foreign direct investment for a business can support a strategy of market development. So expanding into new marketplaces or expanding their brands on a global scale. So in this video, we've looked at what is meant by foreign direct investment. We've looked at some of the reasons why businesses might do it, and then some examples. That's it. Thank you very much.